Hey guys, well, welcome back. We are here. We are here. It's been a couple of days. Um, Now we are getting ready for this upcoming week once again. Thank you for being here. I appreciate you guys. As always, thank you for being here. Today, what I want to do is I want to put a little structure on the way I conduct this one today. So, just right off the bat, I want to remind you guys, for those of you guys that's part of the paid member group, we might not meet today. Reason why the market is actually closed tomorrow for Martin Luther King Day, so we're not going to be trading. So this might be a longer live where I have time to answer more questions. Right toward the end of this live, I'm going to take an opportunity to have some structure with this. This week is going to be very very interesting. We have earnings season heating up. Starting tomorrow, we supposed to have not tomorrow. I mean on the 20th. On Tuesday, the Supreme Court supposed to finally make a decision. Are we going to get it? We'll see. I don't know if that's so far. They have not said if this will be coming out before market opens, or if that's something that will be coming out intraday. They have not set a timer on that yet specifically. But then again, as we have seen over the past 2 or 3 different dates they've given us, they have actually declined to make a decision. They keep pushing this further down the line. In other news, we actually have some not so great news for the market. If you are following the news, you might have seen right after the Friday close. Again, I always tell you guys these things are not coincidence. Every administration does it. It's not just this one. If there's any news that they feel like that might really impact the market negatively, they tend to make those things happen during long weekends. Right, whenever there's a long weekend, you might see a lot of different news that come out that may not really benefit the market. What I'm talking about, if you haven't heard, um, I believe they have announced we might be having a 10% tariffs starting. That's the starting point. 10% on every single European country that does not support the administration goal in acquiring Greenland. So that's the start, and it could go all the way up to 25%. Obviously, this is not good news. This is not good news for us if you're in the market. It's not good news. One of the biggest reason Europe does hold a lot of U.S. bonds, and if they decide to start dumping those bonds, I don't think that's going to happen because that would be economic warfare. So I don't think they're going to go that far. But they do have the option, right? They do have the option because when we put a bunch of tariffs on Japan, Japan started doing that, and then we backed off, right? So it's going to be interesting. So make sure you guys are diligent. We're going to go into the chart, see what the chart tells us. Once again, we don't do any fluff, any BS here. We focus on the chart. I just wanted to share the news with you guys so you're aware about what's going on, things that might affect the market, because we have to make sure that we know what's going on, things that may happen, and we take that information. But for the most part, we focus on the chart. So that being said, we're going to focus on the chart. Let's see exactly how things looking in the week ahead. All right, let me just give a few of you guys a couple of minutes to get on. While you guys are getting on here, let me set up my chat. And as usual, if you are here, would love to know where you are watching from. Would love to know where you guys are watching from. I noticed there's a few of you guys here already. I do appreciate you guys being here. Anytime, anytime. Okay, Jeff, I see you. I just got my chat up right now. We're sort of looking at that. Once again, guys, what's the motto? The motto is POP. It's process over profit. All right. We do not do anything that does not align with our process, and as long as we follow the process, the profit will come. This is the motto. This is what we are going to go with. All right, so we're going to do this a little different. So I'm going to draw this chart in front of you guys so you guys can see every single thing that I am looking at. This is the weekly chart. All right. What are we seeing in the weekly chart? first of all, you guys can see we are on an uptrend. That's a given. We can see we are on an uptrend, right? And this is all-time high levels. All-time high levels right here. You guys see we cannot pass this level, all right? So first thing we're going to see, let's mark that. That's our all-time high level. This is the S&P 500, by the way, guys. That's on the weekly chart. This is the S&P 500. Okay. Besides seeing that this week we made an all-time high the previous week. So last week we tried again. When we tried last week, even though we had increased volume, we actually could not break that to go up. We could not break it. All right. So we're looking at that. And what else you guys might be noticing? You guys can notice how small those candles are getting. You see how we used to get all these big candles with intent with great volume and momentum. What we are seeing here is weakness. All right, so we are seeing weakness right at all-time high. Typically, that is not a good sign. It doesn't necessarily mean automatically we will be going down, right? Doesn't necessarily say that. But what that actually says is it is possible the setup that we are seeing, it is possible that setup is for us to go down. As you guys could see, look at those candles right here, right? What this was previous all-time high before we dropped. The last drop we had in April, right? Once we got to all-time high, every single time, look at this. Soon as we got to all-time highs and you start seeing those candles start looking very, very small. Look at this one, right? Let me zoom in so you guys could see that. So you could see we're losing momentum and we are struggling a little bit. So we're struggling. So let's make sure let's draw that line. Where exactly is our trend line? Trend line would be from here and would take us like right there. So this is our weekly trend line. So we can see there's some weakness on the weekly, right? We have some weakness on the weekly. We can see that. Let me see what we have here. If I see a big candle breaking out, how do I know if it's a buy signal or just a trap? Well, the way you find out whether something is a trap or it's actually a buy signal is you wait for confirmation. Especially at big levels, you wait for confirmation. By confirmation, I means continuation. And again, I might have to explain that again. By continuation, let's go back and look at this level, right? So, for example, we had this level right here. That that was our resistance level. So we had a big green candle. We took that. This is the confirmation I'm talking about. So this week, right? This candle closing higher than this candle. This is called continuation. That's your continuation and confirmation candle. So that means now I know the trend is confirmed. We are moving up. All right. So that's, but at the same time, I still wouldn't, when those things happen, I still wouldn't jump in right on this candle. Instead, what I would wait to do is wait to see a bit of a pullback before I can take the next leg up. All right. This is the breakout pullback. It's best to have a retest to this level, right? But we didn't have that there. But we did have a bit of a pullback. Now let's go on the daily so we can see how we're looking on the daily time frame. So if we are looking at on the daily time frame, actually this the trend line does not sit perfect. Okay, if we fix that trend line so it's perfectly aligned with those lows. What do we see here? We have a wedge pattern, and right now that wedge needs to come. It's coming to an end. So a move needs to happen at this level. Either we're going to break above, or we're going to flush right down. It's going to happen. It needs to take a direction right now. There's no more. By the end of this week, we're not going to have any more indecision. We're going to have an idea. What are we going to have a retracement? Um, I don't think we're going to have a crash, but we might have a retracement, right? So when you're looking at that, this is what we see. We came here, that's one touch. We try to go back. We got to resistance level, came back, hit it again. We try again. It does that, and now we are right at the wedge, end of the wedge. So that means now we have to make a move up or down. All right. Um, this is if we do drop down, what I want to see is a potential breakdown. And if we do break down, I want to see continuation. All right. Now, if I see this, a retest of that level, or even a retest of, let's see, if I put the most recent level, if I see a retest of any of these levels, and then we start coming down where we break this level. So these are structure, right? I'm looking to come and see this around this. This would be the first point, and this would be the second point. So this would be a nice drop in the S&P 500. So that's what I'm currently looking at right now. So remember when I told you guys last week I started hedging my portfolio? This is exactly what I start doing. I am taking hedge on the portfolio, making sure that I protect myself. Just because are the things I was looking at. All right. So if we have a drop, I would not be surprised if there's a drop at that level. Is there a special good in hour during the day when the market is most predictable for new traders? There's no such thing as the market being predictable. If the market was predictable, trading would be easy. What you can do is set up, have a trading plan and follow that trading plan. There's no specific time. We do have more volume early in the morning, right? Between 9:30 and I say about 11:30, and then power hour between 2 and 4 p.m. We have power hour. We have more traders are trading around those time, but it doesn't necessarily mean y- this is the best time to trade for whatever plan you may have. It may be today. Based on the plan you have, the trading plan you have, you'll find an opportunity at 9:30. Or it may be that personally, I don't trade at 9:30. I wait at least 15 minutes before I start trading the market, and that's the very least. Unless I'm trading small cap, um, or it may happen at 1 p.m. So you just never know. Just make sure you have your levels, and whenever they hit your levels, they hit your levels. You cannot control that, so there's no time to actually watch for that. Okay, so as what I'm looking at again here, guys. Let's even if you wanna go on a shorter time frame, if we're doing shorter time frame to see exactly what's going on with the market, you can just take this low connected to that. So we have this, we have that trend line. I can remove this line, and you'll see the rising wedge. This is a rising wedge. All right. So this wedge actually give us a little bit more leeway, a little bit more room, meaning we might consolidate a little more. However, this is what on every single time frame, this is what we're looking at. We're looking at a rising wedge pattern, which means at some point we need to either break out or break down. All right, so be patient and wait for the market to tell you guys exactly what it wants to do. Now let's go down even deeper to the 4 hour time frame and see what we see in the 4 hour time frame. This is what we're looking at exactly in the 4 hours. You guys see how the S&P is moving inside of that wedge pattern, just tapping the top and the bottom of it. That's what we're doing. And what I don't like about it right now, if you're looking at the MACD, let me open that up so you guys can see a little better. What we're seeing in the MACD right now is a bearish divergence pattern. Bearish divergence typically that is a bearish, obviously called a bearish divergence pattern, meaning we're going to go down. All right. Is that something that says that 100% we're going down? No, this is just probability, right? Let me just say we're going down. Let's say the higher probability is we might be doing a pullback. Let's even go even deeper, right? We go even deeper in the 30 minutes, and regardless of all the moves you see the market is doing, those lines are being respected. They are being respected. It comes down here, find support level, bounce. Okay, here, find resistance, it drops. All right. So again, this is what I'm telling you guys. Like as of Friday, some people might be, hey, I'm taking the trade for it to go down. These levels for me, excuse me, these are no man's land. We don't take trade in no man's land. All right. When we're in no man's land, we're not taking any trade at those levels. We're waiting to see, hey, do we have a setup like back here when I was telling you guys? What did I say that I saw? I saw an inverted head and shoulders pattern, which means more likely we were going to do what? Pull up, and we did. And when we got to this level, I said, "Hey, it seems like we're seeing a bit of a head and shoulders pattern, right? Although we rally back up, we never went fully up, and then we fall, right? So that's what we're seeing. And as of right now, if you're looking at the 30 minutes to trade, you would have to do a trend line, and until we have broken above this downward trend line, I don't think we're going to touch this level. All right. So either there's two ways to trade this. If you want to trade this intraday, so there will be two ways to trade that. Either you're going to take that trade once you get to support level and you can see the pattern, the candlestick pattern, or you have the signal, or you have a reversal like something like you see in here, right? Like you have a nice hammer right on that line, like you can see that. Or if you want to take those, you'll see, hey, you know what, I see an engulfing pattern, all these things, right? Then you can take that to go up, but that line will be your first level. Excuse me, that's your first target level, meaning I'm taking some profit off the table if I got in at this level. Or you just wait, let it move up. Once it break this level and gives you a bit of a pullback, you can take it for the next leg up to go to the downward trend line. All right, so that's what I'm looking at in the S&P 500 right now. Now, what scares me a little bit with the S&P 500 is all the bad news we have right before earnings. So remember when I was telling you guys, I wouldn't be surprised. Let me say, I would not be surprised. As a matter of fact, I would say it is likely that we have a pullback before big tech earnings, and then we rally back up. Now, why am I saying that? Because I'm seeing this, like we have a lot of red signals flashing, right? So now we just added to it. I was already have that thinking before we had those Greenland tariffs. I was thinking that way before we talk about the Greenland tariffs, right? And now we got to a point where we're talking about putting tariffs on Europe. So now, what if they reciprocate and they put tariffs on U.S. goods? Right? So, and we already know the American public is already squeezing. Everybody's putting almost everything on credit cards, and we already have food banks running out of food. We got SNAP benefits. We have grocery prices rising, and so if you're in the middle, right? If you're in the middle, you are really, really squeezing. I'm not saying the people at the bottom are not squeezing, but at least if you way at the bottom, maybe somebody qualify for SNAP benefits or whatever. But if you slightly above the poverty line where you don't qualify for these things. Your rent is higher, your energy bill is higher, groceries higher, your phone bill is higher, your Netflix bill is higher, everything's higher, and you don't have any additional help, right? So there's that squeeze. Okay, so when you have all these different squeezes happening, these things break the economy because that means then you can't spend, and if people are not spending, we have a consumer economy, so we need people spending money for us to do good, as opposed to somewhere like China, where China is more like they make most of their money in exports, right? For us, it's consumer, it's a consumer economy, so we need people out there buying things. All right, and when you think about it, again, we have the Greenland tariffs, possible tariffs. We have what is it? The Supreme Court decision that's supposed to come tomorrow. Now, if the Supreme Court decision comes tomorrow, again, the administration, the government will have to refund a bunch of big corporations billions, billions of dollars. Do you think? I really ask yourself, do you think we still have that money somewhere to give those guys back? We don't. But if they have to, they're going to have to. What I think is going to happen, if that is the case, I think a deal will be made where they have tax credits for a number of years. But I don't think the Federal Reserve is going to be like, hey, here's your money back. I just don't think that's something that's going to happen. But we will see how things go. Let's head back right into the chart. Again, guys, let's take a quick look at the cues. See, you already have all these things in the queues. For those of you guys who's been riding with me, you already know exactly what we're looking at. We've already reviewed it. Again, it is the exact same thing that we are looking at. Once again, exact same thing. We have that wedge pattern coming up. Let me just remove that. You can see you have that wedge pattern that's closing, and the scary part about that is the fact that we never could take that resistance level, right? So our best hope, our best bet right now is a pullback, consolidation, and then big tech earnings probably come in and push us right back up. This would be the likely scenario, and the best scenario we can possibly think of. Now, I want to take a quick look at it's been a while since we take a look at Bitcoin. So the bull flag in Bitcoin, null and void. This is done. Why? You guys can see we actually broke down. We broke down right at that level. We couldn't do it. We just could not do it. All right. So we could not do it with Bitcoin. We actually broke down. That's what we're looking at right now from where this is. Now we sort of like back in the range. Let's see if I find a trend line. This is the daily. If I find a trend line like right here, we hope. Okay, let me just say hope. So what we're waiting for is this level needs to hold, and that support level needs to hold. We don't want to fall back below that support level. All right, guys, because this was a hard level for us to take in the first place. 91, like 91.4, was a very, very hard level for us to take. Now that we've taken it, we cannot under any circumstances fall right back down to that level. Because if we do, now it's getting dicey. All right, it's going to get very very dicey. But we need this level to hold. If not, we fall right back again, falling right back. And when I'm talking about the red signs I see flashing, guys, there are a couple of things I'm seeing. The 10-year yield, the 10-year yield is a problem. The 10-year is on a breakout. Uh, for those of us that are long the market, what we want to see is not seeing confirmation on that breakout, but we can see the breakout happen on Friday. It happened on Friday, and we can see. Actually, this is not very good, guys. I mean, the MACD is positive. It's turning. positive here. The MACD just made a higher low on the MACD, and this also just made a higher low, right? Because you can see there's a low here, there's a low here, and there's a higher low right at that level. This is making higher lows, meaning this is on an uptrend, and we do not want um, the 10-year to keep going up. In case you are not familiar, so the 10-year, that's the market controlling the long end of interest rate. So when they talk about the Fed lowering interest rate, if you somebody that have a mortgage, that has no bearing on your mortgage. All right, the Fed does not control that. The Fed control the short end of the interest rate market. That's what they control. So like say your 30 days, meaning your 30-day maybe 60, 90, like we're talking about things like short dated loan, like things like that. Like your credit card bill might be impacted. That might be good for your credit card bill. But if you're talking about a car note, you're talking about your mortgage, you're talking about anything that's like 5, 10, 20, 30 years, this is something that the market settled. The Fed has nothing to do with that. All right. So when you hear all the talk saying, "Hey, as long as the Fed lower interest rate, so if the Fed if the interest rate is at this level, the Fed lower it down to that level, therefore mortgage rates is going to be lower." That is not the case. The Fed does not control mortgage rates. It might impact it in a bit, if it's a lot easier for people to borrow money, but it's not the Fed that controls it. As long as they lower it, automatically will be lowered. This is a market rate. This is a market setup rate, right? So the market set the rates. All right. Um, so that's not good. The fact that we are breaking out. And if we want to take a quick look at the VIX as well, what the VIX is showing us, this is what I'm talking about, this being dangerous, right? So we had a breakout on the VIX. You can say it rejected, or based on what we're seeing here, we can say it came to retest the level. And as of right now, based on current conditions, all right, on the futures market, based on current conditions, this is looking more like a retest. All right, so that means this would be a breakout, retest. The next leg would be higher. All right, so we do need a couple of things to help us out, to help us push up. Okay. By the way, if you guys are here, please make sure to smash the like button smash the like button for me. If you have not yet registered, please say register. I mean subscribe. If you have not subscribed, I know about 60% of you guys that do watch those videos are not actually subscribed to the channel. Make sure to subscribe, like, and comment to help me grow this channel. I do this for you guys. This is a lot of information I'm giving you guys here. I want to keep making those videos. So all I'm asking you guys is to subscribe, like, and share, and make sure to hit the notification bell in case I drop any other videos, which I do all the time, and that way when I do go live, you don't miss anything, so you can receive that notification. Okay, the next thing I wanted to go over with you guys is the IWM. So I also have the IWM. The IWM is at an all-time high. This thing actually broke out, but what are we seeing here? I'm not using this as confirmation. All right. I'm not going to use it as confirmation because I just don't like the weakness I'm seeing. Because every single time we got right up to that level, what do we see? Buyers keep trying to push this up, and sellers are coming in and heavily selling this, right? So we cannot continue to move. I do not consider those as good confirmation. It may still go up, right? It may still go up. Nothing's 100%. Again, everything is just probability, but the probability of this continuing to go up is lower than the probability of that dropping. All right. So this is what I'm talking about. Like the market is, there's multiple things sending red signals and letting us know, hey, something bad might happen, something big might be coming. Kyler Hall, hey, what's up, man? Say Jeff sent you here. Oh, that's what's up. And we if we're looking at that again, if we go, let's see, this is Micron. This is the stock that's been pretty much driving the market. Where exactly is that? All-time high, trying to break out. Can that move continue? This is way, way overbought at this level. This is way overbought at this level. Again, I'm going to go right now, going to check on a couple of stocks, and I will show you guys why I'm saying I think we might do a pullback before the before earnings. Then after earnings, we might actually rally back up, right? So, for example, if we go and take a look at Microsoft, big company, heavily weighted in the stock market. What do we see in Microsoft? Microsoft went, did a double tap at this level. You guys can see this here, and we are crashing down, right? Microsoft is actually down. I think last time I checked that it was nearly 18%. Yep, Microsoft is down nearly 18%, almost in bear territory, right? Almost in bear territory. By the way, for those of you guys, again, I'm gonna keep giving you guys those gems. For those of you guys who don't know bear territory, what I'm talking about is when the stock is down or the market is down more than 20%, that now we're in bear market territory, right? If it's less than 20%, more than 10%, this is correction, right? Correction. Let's say 10 to 20%, that's correction. But if it's less than 10%, that's just a pullback. Right now, I mean, this is the crazy part, right? The crazy part about this, it is possible for Microsoft to come all the way down here. These are the kind of things that's a little scary to me. They already dropping, and what it's showing me is there's still room to go. So I really don't like that. So I do think it is highly likely, right? Highly probable we might continue going down whether we touch this or not. And then when Microsoft report earnings, which is I think the following week, last week of January, when they report earnings, and then we'll see this happen once they report earnings. And let's see if we go again to another giant, Netflix, NFLX. Netflix is actually in a bear market. If you look at where Netflix is currently, Netflix is in a bear market. Current recent high, Netflix is down about 30%. That's about 30%. All right. This was my first buy zone on Netflix. I'm going to put that here as my next buy zone. Netflix actually reports on Tuesday. Netflix report earnings on Tuesday. This is what I would be so happy to see that on Tuesday when Netflix report, if they can drop down to this level, maybe drop below it and then push up, give me a nice hammer closing with high volume right at this level. I would love to see that. This would be a great entry on Netflix. All right, because let's be honest, I keep telling you guys the exact same thing. There's just no way. We know that Netflix is not going away. All right, Netflix not going away. Yeah, they encourage some issues. They dealing with some stuff and whatever and all this kind of stuff. So the stock has been taking a beating. I mean, you can see that here. If I take it from actually the most recent high prior to the split, and it's down 34%. Right, that's a big drop. That is a big drop. So what I'm waiting on for Netflix again, I already had first level on Netflix. What I'm waiting on to see on Netflix, if it's dropped down here, we're adding, right? And we're taking leap calls on that. I'm not doing anything short term, no short dated option for 30 days, 60 days, or 2 weeks. We're talking leaps. Leaps is how you really build your account. And again, another big guy. If we go on Amazon's actually on a pullback, not doing too bad. Apple. Again, we take a look at Apple. Apple did not want that much, although it has gone up. But you guys can see what Apple is doing right now. Okay, let's see. I'm going to give you guys a couple minutes to tell me exactly What did we see here? How did we know Apple was going to drop? For those of you guys that have been with me for a while, I'm gonna give you guys a couple minutes. I'm going to let's see if you guys can find out exactly why that happened. Gonna give you guys a minute here. I know I have a little bit of a delay, but I'm gonna give you guys just a couple minutes. See if anybody don't know this pattern. And if you mess with me, if you hear all the time, with the amount of time we review and talk about these patterns, these are things we should definitely know, guys. We definitely know that. All right, got it. We got to keep rolling here. So okay, so this is a head and shoulder pattern, right? Head and shoulder pattern. That's a very bearish pattern that tells you something is going to go down. And what we're seeing here, this is the left shoulder, right? This is the right shoulder, and this is the head. And when we have this pattern, that tells us what? Once we break what we call the neckline, meaning we are going to go down. Now, how exactly do you measure how far is this going to drop, right? So this is how you make your money, right? This is how you make your money. Now, this already dropped, right? So we had again within that bear flat, that pattern. What did we have here, guys? You again, this pattern you should know. So, which means we are getting very good here. We're cooking here. Head and shoulder, Jeff. That's definitely right, man. That's definitely right. See, right now we are cooking. So we have a head and shoulder pattern. We actually we broke the neckline, and then we are doing what? Let me see if anybody can get that while I continue to talk. So I'm going to show you. So this is how you make your money, right? So once the neckline is broken, right? You can see that neckline has broken. So all you do, you measure this level with that, and then you just do another one. That's 31.57. Right here. All right. So following the rules of a head, a bearish head and shoulders pattern, unless certain things has changed, this is the possibility. See, this is where Apple might come down to. How interesting is that, right? It's what at the support level. This is what I'm talking about. Like the stock market is its own thing, and candlestick pattern. What that does is it sort of tells you. That's the stock market language. So it's trying to tell you exactly what the market is trying to say to you. So if I'm looking at Apple right now and I'm taking a trade on Apple, right? First of all, this would have been a great entry for a short on Apple, although I think I don't like the fact that it's so close to support level because we can see that there. And we all of you guys know how much I respect trend line. So we have a trend line right there. So that might hold it. If the trend line does not hold and we drop down, this is the level we're going to see that. All right. So how would you play this? Now, I'm not going to talk about it. Let's say how I would play that. All right. If I'm not already in yet, but typically I would have already been in on a play like that. But I can't buy the entire market, so I buy certain things, and I sort of like wait until I close some positions to try to get the next leg. All right. So until we actually go and we come down, we break this trend line, right? Let me take this tool instead. We would have to come down, break this trend line, retest the trend line, and I'm taking it going back down below this level to get the leg down here. Again, it's not the full thing. It would not be the full thing, but that's okay. That will be from 241 to 225. That's 16 points. 16 points in terms of option is great money. All right, as long as you know how to buy options, you understand the option chain, this is the kind of move that you can get. It's the kind of move that you can make. All right. I've covered a lot of technical stuff, guys. So I just wanna talk to you guys directly right now. All right. There you go. I'm going to come talk to you guys directly. So, with trading, guys, we just covered a lot. Make sure you guys are prepared coming into this coming week. I can tell you guys what I'm doing. Currently, I am purchasing protections on my protection on my portfolio. Reason why, as I just showed you guys, there's a lot going on. We have too many factors that can drag the market down. I feel like the market is holding on by a thread right now. The market it keeps saying that it's due for a drop, and you guys know when the market drops, those drops are violent, right? They are sharp. This is not any little, drops that happens where you actually have time to get your bearing and actually have time to prepare yourself. You typically don't. More often than not, you don't have any time to prepare anything because those candles are so big, so violent, so much volume. You don't have time to prepare. So for me personally, I feel better just sacrificing a couple $100 to protect my portfolio because if a big drop happened like that, on the drop on the way down. I actually experienced that. I talked to you guys about that when we had one of those drops. I think I can show it to you guys. I believe it was this drop when we had this drop. Again, for those of you guys that are here, that's part of the community. For the paid members, the reason I'm not transitioning over right now is because the market is actually closed tomorrow, so we don't have the market is not open tomorrow. Futures are open. Futures are open. Although I don't think we're going to see much volume, unless you're trading the London session, which I don't. But futures are open, but the market is actually closed tomorrow. That's why I did not cross over. Again, just wanted to let you guys know that. Um, if we're looking here, right? If you guys are looking here, this is what we saw. Look at those red bars, right? Look at that. This was from. Okay, so I'm in the futures market. This is the futures market. Let me go on the S&P 500 so you guys can see it. I know most of you guys don't trade futures. All right, look at that right there. 673 to 652. All right. You see what that you see what one day did? One day took out about nearly a month worth of work to go up. This is how people lose profit, right? This is how you lose your profit by holding on too long, by waiting for the market to do what it's going to do. The market typically gives signals. Why does the market give signals? Because the big money cannot get out of position, and when the market drops like that, that's because the big money is out. Like the institutions that already sold. When you see those big drop happens, trust me, the big money's not in there with you. It's retail traders taking a beating. All right, you might have your 401ks in there. Obviously, you're not selling, and things like that. But those guys, high frequency traders, and those Wall Street guys, they already out. And the reason you can see the warning signs is because it typically takes those guys between like 3 to 5 sessions to fully unwind positions. So you might see the market is a little janky, like the market trying to go up, but it actually cannot go up. It actually it gives you a wick or the candles a little whatever. These are those guys unwinding positions because they don't drop, they don't get out of positions in one day. Their positions are way too big, right? Those guys are buying 100 million, 200 million, 2 billion in some stuff, right? So to get out of that, they cannot just say, I'm just gonna drop that on the market. The market cannot handle that, right? The market simply cannot handle something like that. And on top of that, they want to do that without showing their head, because if they selling, they show everybody they selling. What exactly is every retail trader going to do? You're going to sell. But when they selling, they need someone else on the other side, right? So they selling here, they need somebody on the other side to buy. So it's like they that's what they do. They sell a bit. We tell traders come in, they buy, maybe push it up a little bit, or just hold it right at a certain level, and maybe they take a pause for one day. We tell traders buy a little more, so it goes a little higher, and then they sell some more. That's how it goes. All right. So I'm telling you guys again, I don't know for sure what's going to happen in the market, but all I can do is make sure I'm not caught off guard. So any profit I've made, I just give it all back. Or not only I give back all the profit I've made, but I'm actually also giving my own money back. All right. So I prefer personally. This is what I'm doing. I'm buying VIX. I'm buying the VIX. So the VIX is almost like also shorting the market. It's a hedge. So if you buy the VIX, and what you see with the VIX, when the VIX pop, the market goes down, right? So when those things happen, the markets pop, and whatever you have the VIX, you make a lot of money. Yeah, you're gonna lose more as long as you hold. If you have enough time, you're going to lose more when you lose, but when the market is going down. But by holding the VIX, you soften the blow. All right, by holding the VIX, what you're doing is you're softening the blow. Or if you can sell calls, there's a lot of different things you can do. But just make sure that, for me, let me not say just make sure, because I cannot tell you, I cannot legally tell you guys to buy, hold, or sell anything, right? I cannot tell you guys that. If you want to do any other, make sure you do your own research or talk to a financial advisor for you to do what you do. What I can do is give you guys the information, right? Trying to translate what the market is trying to say, and you can take action based off that. You can do your own homework, and then I'm going to tell you guys what I'm doing, right? So this is what I'm doing. Well, actually, this is what I've already started doing. So I bought the VIX, which we've been talking about the past couple of days. I have some long dated spy puts that I have openly talk to you guys about. Even you guys, when I told you guys that I got those, the market actually went up a little bit, so you knew I was down on them. So this is not like me coming after the fact and saying, hey, this is what I did and things are going so great after the fact. I told you guys when I was doing these things, right? And again, I went one step further to let you guys know, by doing that, it's like insurance, right? When you pay for car insurance, you don't see that money back. But if you do get a car crash, aren't you happy you had insurance? Yeah, I know they're gonna fight. They're gonna fight you. They don't wanna pay and whatever. But you damn sure you're happy that you had insurance, right? Especially if you are at fault. You are happy that you had that insurance, because at the very least they will fix the other person's car. All right, so that's the way I'm sort of looking at it. Anyway, if you guys have any questions, if you guys have any questions, I'm going to be here. I'm gonna be here with you guys. I'm gonna hang out for a couple more minutes, just to answer certain questions. I think I had a question come in. There are so many strategies in your videos, Orb, FFG, liquidity. Should I try to learn them all at once or master one completely before looking at the next one? I would say pick a strategy, master it. Then when you're done, you master it, you have used it, then you can add to your arsenal. You cannot survive trading with just one strategy. All right? This is why I say that. The reason I say you cannot survive with just one strategy is because the market is constantly changing. Your strategy does not, there's no strategy that works in every single market, right? So when the market is very volatile, certain strategy is not going to work because certain strategies need low implied volatility. So not big moves. You need that, right? Certain strategies call for that, and setting strategy, vice versa. So whatever time that it is during earning season, those strategies are different. So things change, right? So you want to be prepared, so you have multiple tools in your arsenal. But at the same time, when I'm talking about the strategies, while you learn the strategies, right, certain things does not change. Your risk your risk reward ratio does not change, meaning like your risk management system, right? So let's say you have a strategy. Let's say you have your strategy is the you want to use the orb strategy, open range breakout strategy. I'll talk about that all the time. If you use the open range breakout strategy and you say, for example, right, I only want to risk 2 hours, right? So this is all I wanna risk 2 hours. That's what my account can handle and whatever. Just because you switch over to a different strategy doesn't mean now you get to start risking 4 hours. Why? Because your account can only handle 2 hour risk, right? That's all you can lose. So certain things does not change. Your checklist, again, going back to your checklist, right? Your check, whether the strategy change, your checklist is always going to be the same. So you still gonna that's what I'm talking about, the process, right? The strategy needs to still fit within your process, right? So I'm gonna take this trade, okay? This is what I know where my stop is. I know where my exit is. This is how much I'm risking, and whatever. I can see the trend. We're on an uptrend and whatever, or the MACD is pointing up. Whatever it is, right? So this is all part of the process. So that strategy that you have all still fits within that process. You still have that checklist, right? Certain things just never going to change with the strategy. There's never going to be a strategy that tells you, hey, you need to get in. You need to buy a stock to go up at resistance level. This is what I'm talking about, right? I hope I'm making that clear. Meaning, the basic still stays the same. We buy at trend lines. We buy at support level. We need to see a reversal candle or candlestick pattern, things like that. So we have to see certain things, right? So these are all part of your process. But anyway, if you guys are here again, I really appreciate you guys hanging out with me on a Sunday night. The market is closed tomorrow, so there is no trading. If you are a paid member who probably came here a little late, just so you know, the reason we're not having the call today is because the market is actually closed tomorrow. Futures market still open. I don't think we're gonna have much volume tomorrow in the futures market, so I'm not going to be live trading tomorrow because the market is pretty much closed. So New York, there will be no New York session. But if you want to trade the UK session, you're free to do so. I'm not doing that. Again, if you like the video, make sure to like, subscribe, and share with other people to help me grow the channel. Make sure to check out some other videos in the channel. As one of the users said, right? I do have a lot of different strategies that I teach. These are strategies that I have used. Some of them you will see me execute. I do have them where I execute those. Exactly. Now I don't just talk about the strategy. I show you how to execute it. Some of them may be in multiple videos, right? So make sure to check out those videos. And again, if one of those strategies does not fit your trading style, does not fit your personality and your character, don't use it, right? There's always going to be a ton of different strategy. A strategy somebody may say that doesn't work for them might work for you. The reason why, again, it might work for you and not work for others is because maybe that is something that goes with your personality. Guess because one thing we know, trading has a lot to do with your psychology, right? So for me, that's talking about the FVG strategy, that video that I posted. This is a very high pressure, intense strategy in the 1 minute, right? I'm trading that in the 1 minute. I'm scalping that on high momentum, high volume, small cap. So these are quick. You need to make decisions on the fly. Some people cannot make decisions like that. Like when I see the opportunity when it presents itself, I may have just about 10 to 15 seconds to make a decision. Do I take that trade or do I not take that trade? Are you comfortable taking trade in 50, making a decision and be clear in 15 seconds, right? Can you do that? Can you execute that? Maybe that doesn't go with your personality, right? You're somebody that likes to see something. You want to take your time and analyze it and say, hey, do I want to take it? Let me review my checklist and check this and check that and whatever. And that's okay. There's nothing wrong with that. That's just your personality, right? We all have different personalities. There's nothing wrong with that. If you cannot take trade in the 1 minute, there's nothing wrong with that. If you cannot take trade in the 30 minutes, because for some people, a higher time frame means they have to sit there. A higher time frame means they have to sit there and they have to wait and watch that trade develop. And some people are not patient. They start getting itchy, they start moving around and they like, oh my god, I can't sit here and watch that trade, and you know what I mean? Like, so things like that happens. So the biggest thing about trading, one of the biggest things is to find your trading style and find a trading plan that fits your personality. And one thing that I would say, what that's one of the things that I try to understand with people, right? To see your trade when I teach, to try to see what your character is, your personality is, and determine, hey, again, I cannot tell you this is the only thing you can do, but I can say, hey, based on we I've been teaching you, we've been meeting for X amount of time, and based on that, this is what I think would be best for you. That's the route to take, and based on that route, this is the strategy. This is the trading plan we're going to work with. Now you can say, you know what, Lord, I appreciate it. Thank you very much. However, this is the way I want to trade, right? I can't fight with you on that, all right? But I will always try to guide you. If you allow me to guide you, I would always try to guide you. But that doesn't mean necessarily I will not show you any other strategies, right? And the great thing about that is the fact that I give you guys some time to actually practice, right? I make you take trades. You will take trades in the live market on a demo account. And guess what? That will separate and really show you this is the result. On your swing trade, this is how you did. On your day trade, this is how you do, right? And the beauty about that, guys, for those of you guys that's about to take the class with me, and for those of you guys currently taking the class with me, I will let you guys know that right up front. We use TradingView to trigger those trade. You cannot lie about why you took a trade and whatever, because the trades are recorded. You cannot modify them. They are there. We will review them, and you will see it, right? And it's a gift for you, to be honest. I don't want you to see that as this is like big, some sort of big brother thing. This is a gift for you because you cannot modify it. So you have to be completely honest with your trading because it will show in TradingView exactly what you're doing, right? That's just the way it is. And guys, I have a project I'm working on. I know this is the tail end of this video. I have a project I want to work on. I want to see that as my way of giving back to the community. I have seen the news about how many black women have been laid off over the past year. This is they Black women right now have the highest layoff rates among every other demographic. So one thing I want to do, I want to set up a free seminar. It will be done on Teams. Let me not seminar, but let's say webinar, not seminar. It would be a free webinar um, to try to teach about. I'm trying to get up to. I would, but that need to be a minimum of 25 people. Needs to be minimum 25. I want to do that for them. It is free of charge. I want to do that free of charge. Just doing that just to try to educate people about the stock market and how they might be able to supplement their income while they are still looking for work. And my goal with that and my hope with that is hopefully even if it's one person or 2% out of those that show up for the webinar, if I can help a couple people either make some additional money as a side hustle to get by in the meantime. That would be great. But my goal is at the end of all that is a couple of them don't even feel the need to actually go back to the workforce, because they can now have the freedom and have the tools they need, understanding that that's something that they have there that they can actually learn to trade and make some money. All right. I do think this is while I'm doing that again. This is one of my biggest thing for me. This is one of those little nugget I want to send out to the sisters. I really want to do that for them. But obviously for you guys here, always doing that. You guys are always welcome. But one thing I do realize, a lot of people actually don't have any idea the opportunity the stock market presents, or don't even know where to start or what to do, or know nothing about it, right? So they just really just don't know, right? So I just want to do that as more of a, it's not a class to teach trading per se, but it's more of a class to educate about the possible opportunity that might be there, and whatever. And whether somebody wanna join my community or join a different community or go on their own to do their own thing, at least they know. I just wanna share the information as far as what is possible. Again, the stock market is the only place where the only person that can lay you off is your mistakes. That I'm gonna put it that way. It's your mistakes. That's the only thing that can lay you off. You are your own boss. You do exactly what you do. Especially for those of you guys, again, that's still here. For those of you guys who trade futures, again, I do partner with Apex. Make sure you reach out to me in the community regarding futures trading. I'm helping people in there right now. I believe they have an 80% off coupon going on, something like that. I'm not going to put that on there as on, like, there's not gonna be a link for this on this. Maybe you can check a different video, because I just don't wanna turn those reviews as some sort of like a marketing tool, and whatever. So I don't wanna put promo things on those reviews, because I really just wanna do those reviews just to help you guys out and just review the chart and just focus on that. But that being said, again, it's 10. I'm not seeing any other questions coming in. I do appreciate you guys tuning in. Again, just be careful, man. That's the only thing. That's something I can say. The market is letting us know something big is going to happen. It's either going to be a big move up or a big move down. We just don't know yet, because as of right now, as of right now, we are squeezing. We are squeezing as of right now, and this is such an opportunity. And the reason I'm saying it's such a great opportunity is if you wait and you get the direction and you take it and you manage your trade properly, that's going to be a great win. I promise you that. That will be a great win. You just have to be patient and strike. All right? No fear. If it shows its head, it shows you where it's going. Right? Meaning we have a breakout, we have continuation. Breakout, nothing is done yet. We have continuation. Okay, we're gonna look at it. Say, okay, we have continuation. So what you wait for that retest. It will ultimately give you an opportunity. All right. The market always going to give you multiple opportunities when it's going a specific way. I'm gonna go back to the chart real quick again to show you guys that, right? So while we were going up, so let's zoom out so we can see that move the market did. Okay, we can all see how much the market went up. It was way down here. Let's say you missed it here. No problem. Okay? Why did I say it will give you an opportunity? It comes back here, give you an opportunity to get in again. That's two. Let's say again, this one, you missed it. Okay? Let's say this one you missed it. That's no problem that you missed that one. It push up, come back again. Gives you another opportunity. Right? Let's say at this level, again, you're a little scared. You say, oh, you know what? I don't want to take that one. Again, it push up, came down, give you another one. Once again, you know what? Let me just do it this way. Okay? Came down, come down, up, down. We can go all the way through here. Push back down. So you guys can see exactly what I'm talking about. All right? You guys can see exactly what I'm talking about. Let's even say all throughout those times you were never in. You never got in all through this time. Now, take a look at this once more. That's another opportunity. What at that support level for you to get in? All right. Say you don't take it at support level again, it pop up, it break out again, pull back, break out again, pull back again, do a double bottom. So now you have another opportunity. It push up because the market moves up. It doesn't move up in a straight line. There's always going to be opportunities for you to get in. All right. On the way down, it's going to do the exact same thing. Or if it continue to go up, it's going to do the exact same thing. You do not have to try to predict the absolute beginning of a move. You don't have to try to predict the top or the bottom of a move. All right, you can like I'm a very aggressive trader, right? I'm a very aggressive trader. So sometimes I may not wait for something to fully put in a bottom because I have certain levels. Like I expect certain levels to happen. Say, hey, this level happened. Okay, I'm gonna start a position again, not full position, but I'm starting a position. Then in starting that position, say, hey, if it goes lower, that's the second level. I'm gonna add more at that level, right? So this is how you do it. You have multiple levels. Say, hey, this is where it might bounce here. If it doesn't, it continues to go down. This is where the next level is where it might bounce. All right. So if we are continue to go up, expect to see the exact same thing. And if it's going to be a breakdown, expect to see the exact same thing. So even if you don't take any of those, right? If you well, it would be great if you're able to take that, then write it all the way down. But it's okay if you just get from this level to that level. There's nothing wrong with that. This is, for example, that's just an example. That's hypothetical, but that would be from 662 to 646. That's 16 points. 16 points move. If you buy an option, 16-point moves is a lot. That's more than a double up on your money, right? So imagine you put 5, 10 grand in that, and those things really gonna take what, a couple of days to turn 10 grand into 20. Or let's not say 10 grand. Let's say you start slow. You didn't have much. You could only buy one contract, and the only contract you could buy is something that costs 500, right? And in a matter of a couple of days, you turn 500 into 1,000. Like those adds up, and they add up. They add up quick. But what you don't want to do is try to anticipate this is going to make a great move and break above, so I'm gonna buy here, so in case it breaks to this level and whatever, I'm good, right? Why would you do that? Because that's a 50-50. That's a 50-50. What I want you guys to get really really good at is start looking at 75, 80% probability trade. This is a probability trade. All right, that's what we're doing. Is like, hey, you know what, we have to understand and accept the fact that we're not trading with all the information everybody have. Like the big money have more information than we could ever. As a matter of fact, when you send in an order, those guys can see your order come in, and they can front run the order and buy it cheaper than you trying to buy it. And by the time your order gets there, they sell it to you at the price you're trying to buy it. That's how quick those guys can execute, right? So we're not trying to be the first. We can't be the first and whatever, and things like that. Obviously, you wait to find signals, and when you see signals, you take certain things. As long as you, especially if you're buying long term, just know your levels. You get things at your levels. That's all it is. I'm going to remind you guys again. Warren Buffett said one thing that is it is so true. Time in the market will always beat time in the market. So you cannot time everything. All right. This is why I always tell you guys again, you have to get used to buying leap calls on very profitable companies that have dropped at least 20%. That's you being in the market, having time in the market, right? And last thing I'll say, I'm going to conclude here. If I go on Google, Googl, when everything was moving and Google was not doing anything, that's how I was able to get that trade. That's how I was able to get it. Right inside of that channel and just write that up. That's how I was able to get it. I just stayed in. I was patient. I didn't get impatient. Say, hey, you know what? I see this stock is running. Like, hey, you know what? I'm just gonna wait. I'm just gonna wait. And then just like that, it just popped. All right. So this is what you guys need to do. I'm spending so much time with you guys right now, like it's crazy. Let's see. Amazon, I had told you guys, remember when I told you guys I was out of Amazon? Amazon seems like he's doing a bit of a base. I believe I did tell you guys I was out that day. I told you guys, hey, I don't like this. I'm out. Hey, you know, that's me being out of Amazon. Amazon actually has done a nice drop since, but it seems like it's retesting that support level. So you could see Amazon is doing a bit of a bull flag right here. So we'll see how that plays out. But as of right now, I took my profit and I ran. That's that, that's what I did with that trade because I kept reviewing it with you guys, letting you guys know where I was with the trade and whatnot. So I figured, I'll let you guys know. Anyway, guys, it's 10:15. It's always great hanging out with you guys, coming here and doing all that. Then again, I will see you guys tomorrow again, same time. Well, not at 10:15, but at 9 for the market review. But I am dropping a video tomorrow about my top three trades for this coming week. So you guys going to see those. Now just gonna let you guys know what those stocks are, so you'll see them. You can do your own homework and see where you should get in and what you should do and how to manage things. But guys, again, I appreciate you guys tuning in. If you are here once again, don't forget to like, subscribe, so that way, and turn the notification bell. So when we go live, you don't miss any videos. When I drop those strategy videos, if you have not seen those strategy videos, I will encourage you to go watch some of those strategy videos. Trust me, they are informative. Even if it's strategies you already use, it might be a little tweak that I put in it that may be able to change things for you, or maybe something that you can use to complement what you're doing. All right. Well, guys, take care. Have a good one. Well, I can't even say stay green because tomorrow there's no market, right? Anyway, stay safe, stay warm if you're in the New York area like I am. It's been freezing and snowing. I do like the snow. I do like the cold, but I'm getting tired of it right now. But anyway, guys, take care. Thank you for tuning in. I'll see you guys again tomorrow.